The National Stock Exchange said it will exclude 34 stocks from the derivative trading segment from the July series. That's starting tomorrow. These stocks were found to be ineligible based on the exchange's enhanced selection criteria. Navneet Saluja is standing by with the details. Navneet, first a quick recap of the announcement in April.
Well, Neeraj, the announcement came on April 22nd, where National Stock Exchange highlighted that they will be excluding 34 securities from the futures and options market starting July series, and that's tomorrow. Well, so for those 34 securities, today is the last trading day in the F&O market. And well, if you look at these securities, the names which feature, they're fundamentally sound. Some of them may not be fundamentally sound, but the reason they're coming out is not fundamental. It's technical, actually, because they've not met the eligibility criteria. So we'll just pull up what this criteria list is. One of them being the company should feature among the top 500 companies in terms of average turnover. The other being the market-wide position limit should not be less than 500 crore. And also in the cash segment, the average turnover in the last 6 months should not be less than 10 crore for these companies. And the quarter sigma value in terms of order should not be less than 25 lakh rupees. So these are basically the criteria which these companies have not met in the last 6 months, and hence the reason, Neeraj, why they will be excluded from the derivatives market starting July series.
Okay, so how have these stocks reacted since the circular was put out?
Well, out of the 34 stocks, almost 24 have given you negative returns starting April 22nd, and 10 of them which do feature some fundamentally sound companies have given you positive returns. So let's just look at the top 10 losers starting April 22nd till yesterday. You have the likes of PC Jewelers, Jet Airways. Remember, the top 4 companies, the reason can be corporate governance, promoters pledging shares, and also high leverage for these companies. For example, look at Reliance Power. I still don't understand why the stock was trading in the futures and options space in the first, in the last 2 to 3 series itself. So you've got PC Jewelers down 63, Jet Airways, TV18 Broadcast, and also companies like Godfrey Philip, some of the banking stocks, South Indian Bank, Karnataka Bank, Chennai Petroleum, all of them have given you negative returns between 19 to about 63%. But there were some gainers as well, though 24 stocks slipped, but there were about 10 gainers in that list. DCB Bank, by the way, has been doing pretty well post its Q4 numbers. That's given you 15% return. Well, stake sale from Canara Bank in Canfin Home is back on the table, so probably that was one reason why the stock gave you positive return. VGuard touched its all-time high levels in yesterday's trade, and some of the banks saw short covering rally. Indian Bank, Syndicate Bank, and India Cement actually has been underperforming the entire pack, so probably that could be the reason. Also the valuation gap that it exists alongside the peers. And Oriental Bank, Kaveri Seed were a couple of other stocks that gave you positive return. But in the last 2 sessions, you've seen wild moves coming in for a lot of these stocks which will be excluded. Whether that move was on account of short covering or there was a genuine buying in the cash segment, that will be answered only once these stocks are out of the F&O space. We'll see whether this buying continues or not. But look at IFCI, 32% in last 2 sessions. I was talking about the banks, PSU banks. There has been short covering rally in stocks like Allahabad Bank and also Syndicate Bank. India Cement has moved 14% in last 2 sessions. BEML gave you stellar returns in yesterday's trade. And also, as a pack, Pharma has not been doing well. So you got Ajanta Pharma and Wockhardt, which are down for the series, but definitely there was some bit of short covering bounce that came in for Wockhardt. That's up 8% just in last 2 sessions.
And some of the stocks actually took the markets by surprise as well, the ones in the exclusion list, Navneet.
Yep, there were a lot of them, and as I mentioned in the start, the reason is technical. They're coming out, not fundamental, because they've not met the enhanced eligibility criteria which is laid by the exchange. So you've got DCB Bank that gave you good returns. Canfin Home, I think the reason, as I just highlighted, Canara Bank could be selling stake, VGuard, NHPC, India Cement, and you've got Repco Home Finance. So the stock has not given you good returns, but the housing finance space in itself is not doing well, and Ajanta Pharma, Wockhardt from the pharma space will be out alongside Godrej Industries. These are the stocks actually which are heavily traded on the cash side. It's just that they have missed meeting the criteria, hence they will be excluded come tomorrow.
And it's a simple way to figure this out. If you look at this list, there is a DCB Bank which is trading near 52-week highs. India Cement which has not gone anywhere, so you could probably argue, but the price hasn't really dipped too much. CEAT, because of the entire pullback in the tire space, has had to meet the price fall that it has met too. But surprising, some of these names
CEAT from the April 22nd till now, it has given you negative returns. The move, I think, which came in last 2 days, was on account of the news also of countervailing duty being levied on Chinese import of tires.
Yeah, but not not fundamental reasons. Otherwise, a fairly liquid stock, but stocks like CR essentially have fallen because of what's happened in the space at large and not idiosyncratic moves on the stock. But the one name that stands out, of course, Jet Airways. Wild moves in this series for a lot of you who might be still in the positions on Jet Airways. Navneet, what happens to the stock now?
Well, things change come tomorrow because the wild moves that we've seen in the June series will not last any longer. Remember, on June 20th, the counter moved intraday higher by about 150%. And the reason why we're seeing these wild moves because the stock was in the F&O segment. So there are no circuit filters. From tomorrow, it's going to be out of the F&O space, and also in the cash segment, it will not be available in terms of rolling settlement. It moves to trade for trade. What does that mean? Compulsorily, you have to take delivery if you're trading. You cannot do any sort of intraday trading in Jet Airways. And also now in the T2T segment, there will be a price band of about 5%, which tells you cannot see a higher move either on the upside or on the downside for Jet Airways starting tomorrow, Neeraj.
Well, this will be an interesting one, and this series has been an interesting one for Jet Airways too. Navneet, thanks so much for putting all of that into perspective.